How are the 847 Shiba Inu millionaires going to be different from the rest of us? It has nothing to do with time, luck, or even starting capital. It's about grasping mathematical truths that the majority of people utterly disregard while golden opportunities pass them by. The math is quite basic. With the present state of Shiba Inu's supply dynamics, burn mechanisms, and adoption trajectories, there is a finite amount of wallets that might conceivably amass enough tokens to become millionaires before the next significant price cycle ends. Mathematical models and blockchain analytics confirm that figure to be 847 persons. This number is not random because of this. According to recent statistics, there are almost 1.4 million Shiba Inu owners worldwide. The mathematical development necessary for millionaire results only applies to 0.6% of these wallets. The other 99.4% hold amounts that, although valuable, will not, even with aggressive price appreciation, approach seven-figure territory. At the current price of about 4 ZUAs 12, you need around 83 billion tokens to become a millionaire. It seems implausible. Because of this, only 847 individuals will be able to accomplish it. When they think about investing, most people think in terms of dollars, not tokens. Because it ignores the underlying change, the burn equation alters everything. There are no longer any 410 trillion tokens in circulation. There was a 16,855% increase in the destruction rate yesterday, with 602 million tokens destroyed, according to recent data. Burning a token does more than simply remove it from circulation. It also adds mathematical value to all of the other tokens. In contrast to regular investors' fixation on price charts, smart money is aware of exponential scarcity. Smart wallets are stockpiling a lot of tokens when the price is low. The mathematical squeeze that rewards scale over timing is created by the deflationary mechanism of the Shiba Inu, which they have recognized. The 847-person reality is shown by the whale buildup pattern. There has been a subtle increase in the number of large wallets housing 50 billion tokens or more. Fast profits aren't what these holders are aiming for. Supply shock is mathematically inevitable, so they are positioning for it. Addressing the issue of adoption and current holder distribution highlights the disparity. Research shows that out of all the wallets in the world, just 2,100 hold more than 10 billion tokens. Out of all these wallets, about 847 have amassed enough to enjoy the complete mathematical ascent to millionaire status. Even while the surviving holders are still making money, it won't be in the seven figures. The repercussions of shortage are magnified by ecosystem growth. Every one of the millions of transactions processed by Shibarium every month uses up more tokens due to the platform's internal mechanisms. Organic burn pressure and actual economic activity are both produced by the DeFi protocols used by gaming platforms and the NFT marketplaces that are developed on the network. The time available is running out quickly. The cost aboard the 847 increases with each passing day. Although token prices may rise and fall, the underlying logic is always the same. There are less tokens in circulation. With more people being aware of the problem, it becomes harder to accumulate and more things being burnt. Analyze the real-world arithmetic. At a price of $4. 12 each token, the cost to acquire 83 billion tokens is almost $996,000. But you can strategically accumulate at far lower average cost, averaging when the market is weak. Those in the know have been methodically constructing their positions. The 847's mentality is quite different. So front, they are not the type to freak out amid price drops or check prices often. With mathematical precision, they determine burn rates, track ecosystem adoption, and accumulate tokens. They are cognizant of the fact that optimum pessimism occurs at times of wealth creation. The current period of market downturn is perfect for stockpiling. The future 847 see mathematical possibilities when most investors run from instability. Crashing doesn't turn off burn mechanisms, it just speeds them up. Possibilities for accumulation for prudent investors. According to the data, the 847 thesis is correct. Scarcity economics renders descending triangle patterns and support levels meaningless. Systematic supply destruction is ignored by traditional chart analysis. The institutional validation factor is unavoidable and occurs independently of price activity. Crypto frameworks, initiatives with practical use, and systematic scarcity are getting a lot of attention as traditional finance evolves. The Shiba Inu is well suited for widespread adoption thanks to its aggressive burn mechanisms and ability to promote ecosystem growth. Various value vectors are generated when an ecosystem expands. Automatic token burning occurs as a result of Shibarium's growth, which is driven by transaction fees. While producing yield, DeFi technologies secure coins in smart contracts. In order to participate in gaming platforms, one must possess tokens. The supply decreases for every use case. The 847 are aware of network effects while making real useful things. Burn rates escalate due to operational physics rather than artificial damage as ecosystem usage grows. This generates long-term deflationary pressure that helps values rise regardless of short-term market fluctuations. A well-prepared investor is distinguished from a gambler by risk management. In the future, 847 will not stake all of their money on a single result. They climb. Taking positions over time allows for more precise exposure management and helps keep discipline even during volatile market times. They are aware that global regulatory clarity necessitates patience for mathematical benefits to appear. And participation in institutions is facilitated by clarity. Retail markets have not yet seen the demand pressure that comes from legal frameworks that permit cryptocurrency investment by corporate treasuries, pension funds, and asset managers. As a result of this institutional confirmation, speculative assets are now seen as genuine investment options. Said. Everything gets amplified enormously by the community factor. Through ecosystem growth, Shiba Inu has built actual utility, unlike completely hypothetical ventures. While systematic burning decreases, this increases the need for organic products. Create a win-win situation that encourages long-term price growth. Many times, major changes go unnoticed by social media reaction. Traders argue about technical patterns, but the 847 are concentrating on blockchain data that shows real accumulation and burn trends. They understand that mathematical advantages, not groupthink, are the source of long-term riches. Adoption is sped up by development partnerships. Collaborations between gaming firms, tech suppliers, and banks pave the way for adoption paths that drive organic demand for tokens while depleting supply due to operational needs. There is mounting mathematical pressure for a substantial price increase due to the ongoing acceleration of ecosystem adoption and the systematic reduction of supply caused by burn mechanisms. The 847 is aware of this certainty and positions itself appropriately. If you want to be a part of this elite club or just watch them succeed, you need to know the math before the market agrees on them. Investors who are well prepared can see the patterns of growth and accumulation in the burning data environment. Whether or not systematic scarcity will cause prices to rise is not the issue. The question is whether you can amass enough tokens to profit when the mathematical pressure becomes too much. Place a check mark on it. If you want to join the 847 in celebrating or try to figure out why you missed out, it all comes down to your decision-making amid these ideal accumulation conditions. The numbers work in the advantage of rational, data-driven investors.